Good afternoon to all. Before we continue, a quick reminder, online trading involves the risk of losing your funds. Make sure you understand all of the risks involved, exercise caution, and trade with brokers you trust that hold the appropriate license by the FSCA. And now, I am honored to announce the next fireside chat on mastering trading expectations. I'd like to invite on stage Chiara Tenover, social media coordinator at the XM Group, and Reino, Deetlefs, Chief Instructor Africa at TRADEPEDIA. Stage is yours.
Thank you, Jeff.
Hi guys, how's everyone enjoying the FMAS? Cool.
Hello, hello. How's everybody doing? Fantastic. Always a pleasure being here. How many of you were here last year? There you go. All right, so obviously Chiara, she's our social media manager. My name is Reino. I am the Chief Africa Instructor for XM. And basically our topic today is all about gaining insight into what is the road to becoming a successful trader, complete transparency, and also trying to give you guys insights into some of the misconceptions when it comes to online trading and the road to become a successful trader.
So why do over 10 million clients choose XM as their preferred broker? What makes them happy?
Well, as you guys can see, our motto is Big Fair Human. First of all, we do a lot for charity, okay, but we put a heck of a lot of emphasis on education. So we even have an offline trading educational place here in Sandton that you guys can come and join. And a lot of focus on transparency. So, you know, we got free live and interactive educational platforms. We got over 75 instructors globally teaching in over 30 languages. So I think we still need to add Xhosa and Zulu, but we will get there, right?
We've got various different account types to suit every single kind of trader. We've got a zero swap account. We've also got shares accounts. And we offer over 1,000 instruments to trade, so you'll never run out of something to trade.
Yeah, so we got accounts for different styles of trading. You know, even with our micro, ultra low accounts, if you like taking positions overnight, you don't pay swap fees on most of the instruments, so that might be something you want to have a look into. Then we got free daily signals from my TRADEPEDIA analysts. They are based in Dubai. This is what they do. And, you know, we also have our new social trading platform where you guys get to interact with many other traders. And since we have over 10 million clients, you get to bounce off ideas, you get to chat to them about different theories, different instruments.
We have zero requotes, so you'll never be requoted on an order entry price. And we pride ourselves on being a full transparent broker, and there's no hidden fees with XM.
And then lastly, this is now before we get to our topic, you know, we got great customer service, pretty much 24/7. They're always there to help you. And we got very fast payment and withdrawal options. But you need to make money first before you can withdraw, right? So this is where we get into our topic.
So by a show of hands, how many of you are making money consistently?
You don't have to be shy, guys. You can raise your hands. Okay, so let me start off by stating the sour reality, and that is that most retail traders, unfortunately, like yourselves, lose money. Okay, and the question is why? And the big reason is because you're probably missing one or two of the three key ingredients that you need to become a successful trader. And those three ingredients are, first of all, a method, a working system that you can trust, something that is consistent, then money management, controlling your exposure to the market, right? Not risking 100% of your account on one trade. And then lastly, psychology, having the right mental approach when it comes to trading, you know, controlling your emotions, because listen, if you are a trader, you can only control these things. You can only control your method, your money management, and your mind. I cannot tell you what's going to go on with the market tomorrow or next week, right? Nobody knows. This is why you need to take control of the things that we can take control of.
So you mentioned a method. What do you mean by that?
Well, a method is basically the thing that you guys use to tell you whether you should be buying or selling something. Yes? It could be based on various things. You know, technical analysis, where we study the movement of the price on your MT4, MT5. Could be based on fundamental analysis, where we compare different instruments to each other, intrinsic value, how they affect the economy. And it could be market rumors, right? Some guy on Bloomberg telling you to buy something. Could be copy trading, it could be signals. And then probably the most one used is gut feeling, right? Why did you buy the euro?
It just felt right.
Yeah, I woke up on the left side of the bed and it looks good, right? Which is obviously not the most consistent method to use. So it doesn't matter what you use, right? At the end of the day, no method is sufficient on its own. There's no method out there that is 100% correct. Losing is part of the game. You have to take a reality check. And that is why you need money management and the correct mental approach in order to make money. So, in order to understand the markets a little bit better, I'm going to show you guys, this is actually part of Charles Dow's, one of his principles, and it's the 3 market phases. Now, there's 3 market phases to every primary bull and bear market, okay? And the first phase is what we call the accumulation phase, and it's here where me as a professional trader, we are not involved, right? Sorry, Kira, do you mind? No, here, just move a bit. Sorry, guys. I know she's beautiful, but we are here to learn as well, yes? Okay, so in the accumulation phase, the smart money, your big banks, your hedge funds, they acquire stock, usually on hidden information. But it's also here where the beginner trader, you make a lot of trades and you end up losing a lot of money and you get frustrated, right? Because the market, it has no direction, okay? The market's going sideways. And then you get what we call the public participation phase. And this is actually the phase where we as professional traders, we get involved. Why? Because it makes sense, okay? Whether it's based on fundamentals, technicals, the market is trending. And this is why I get into the market. It is the phase where it's the easiest to make money. It's the phase where the price moves the most. But unfortunately now for the beginner trader here, because they made so many losing trades, they have a fear of loss. So they miss out on this whole participation phase. And then we go into the distribution phase. And this is where the whole public is involved. Granny's involved, Kazi's involved, dog's involved. But it's here where the smart money, they realize that conditions aren't that great, and they start distributing to the public who's more than willing to buy because the rumor is still going out there. This thing is going to the moon, right? And it's also here, unfortunately, where the beginner trader, because you missed out on the participation phase, you have FOMO, right? The fear of missing out, and you buy it at the top, and the market comes down in a blaze of glory. Right? And this will continue. You will go from here to participation, into accumulation, and the whole story continues. And this is why you need to know your fundamentals, you need to know your technicals, so that we can follow the big players, right? Because it doesn't help fighting them. Okay? All we can do is ride the wave and not fight it. You will never win. So,
why do so many traders like yourself see the importance in money management?
Okay, well, I mean, any business, you know, they have all these departments, and one of the most important departments is the accounting department, right? So you as a trader, you are everything. You are the CEO, you are the trader, you are the accountant. right? Basically, you have to minimize your losses and maximize your gains. And basically what money management consists of is, first of all, a stop loss order placed for every trade. How many of you guys don't use a stop loss? And I know why, right? The crazy mind in the back saying, remember last time, market came down, hit my stop loss, and then went the other way. Now, you're either putting it in the wrong place, or it's just part of the game, right? You do get stopped out quite often. Next up, a specific amount of money to risk in each trade, meaning how much am I risking of my account in every trade? And this needs to be small, it needs to be consistent, right? I mean, 1%, 5%, 10%, everything on one trade. Now the key is, if you keep it small and consistent, one trade does not become more important than the other trade, therefore you will not marry that trade, you will not get emotional about that trade, and that trade will not be the one that brings you down. And then lastly, we need to find a balance, right? The maximum amount to risk over a given time period, meaning you need to have limits in place. How much can I risk per day? How much can I risk per week? How much can I risk per month? I mean, it doesn't help I say, okay, I'm only going to risk 1% on a trade, and I take 100 trades, right, on one day. I'm risking my whole account. So money management, at the end of the day, the risk is different for everybody, right? She likes jumping out of planes. I do not, okay? And I can tell you now, yes, you can take big risks and you can make a lot of money, but the emotional strain that it will put on yourself and the swings in your account, it is not worth it.
So, how much time should I be willing to put in to be successful in the long run?
Well, time is, I mean, it's all relative, right? At the end of the day, how long it's going to take you to become successful is different for everybody, right? Now, when it comes, let me quickly show you this. So expectancy is how much on average are you going to make or lose per trade, right? How much are you making per dollar at risk? And the calculation is the probability of win times the average win minus the probability of loss times the average loss. Now, if we look at this trader's method, right? This trader is only 30% correct, meaning that out of every 10 trades, he's 7 times wrong, 3 times right. This is not a very good method, yes? Most of you will not be able to use this method. But if I told you that on average, the average winning trade is $1,000, the average losing trade is $200. You plug these into the equation, this trader is expected to make $160 per trade. So in the long run, if your expectancy is positive, you will make money. And once again, we come back to most traders putting too much emphasis on the method, right? Because I know a lot of you guys might have a method that's 70% correct, 80% correct. But if I ask you, are you making money? You're probably saying, nah, not quite yet, okay? So having a good method, yes, it's good. But any talk about accuracy needs to take expectancy into the equation, all right?
So, as I said before...
Oh yeah, coming back to your question, you know, most people...
How much time, should I be putting in to be successful in the long run?
Listen, the problem, first of all, is that human nature, right? Most of us, we would not feel comfortable with a system that produced more losing trades than winning trades, right? I mean, it is our human nature. We get brought up this way. It is part of our social upbringing. You know, when you are little, you get rewarded when you do something right, and you get punished when you do something wrong. This goes against the world of trading, yes? The percentage of winning trades, it is not the most important factor in building a trading system. Yes, you need something that is consistent. You need something that you can trust. but it's allowing your profits to run and cutting the losers quickly. That is, you can have not a great system and still make money if you have a positive expectancy. You have big winners, small losers. That is how you make money in trading. So take a reality check. Losing is part of the game. It is part of trading, and the quicker you realize it, the better you are off for it. Amateurs care about being right. Professionals care about making money. Okay? That hope, that need always to be right, this is why you hang on to a trade forever.
Yeah.
Right? You have 5 good trading days. You have that one trade that destroys everything. It is because you cannot accept to be right. Okay? Trading does unfortunately not work that way. So, in terms of your time, there are certain stages that a trader needs to go through in order to become successful. And there's 4 stages, right? There's the unconscious incompetence, there's the conscious incompetence, there's the unconscious competence, and the conscious or unconscious competence. And basically, every trader goes through these 4 stages from knowing nothing, thinking trading is easy because you see all these social media photos, right? People on yachts, living the dream. Then you realize it's not easy money. And this can take years, right? It's different for everybody, but this can take 2-3 years where now you go and you look on YouTube, you start doing more research, you're trying to become better, and at the end of stage 2, you go into stage 3, and you realize, you know what? I can actually make money if I just stick to my money management rules and my method. It's not that complicated. And then obviously stage 4, this is where everything's on autopilot. Then this is when you have a growing account and you've realized that I'm not going to be right. I cannot predict the market 100%. And once you realize that, it's like a big weight gets lifted off your shoulders. So just looking at statistics, and I'm not here to scare you guys, but 60% of new traders in the first 3 months, they quit. And it's okay, because if trading was easy, we would all be millionaires, right? All driving Bugattis, living the life. But, you know, another 20%, they keep going for a year, and they want this instant gratification where I want to make this my job now. I want to turn $100 into $1 million now. So you end up taking risks that are guaranteed to blow your account, which of course it does, right? Then, of the remaining few, 20% will go on 3 years, 4 years, but only actually 10% goes on to make it, to become successful traders. But you know what? Become part of the 10%. Luckily, trading doesn't care what your background is. Where do you come from? What degree do you have? I've seen many smart people fail at trading. I've seen many people without degrees become very good at trading. Okay? So the whole point here is give yourself enough time to stay in the game, to learn, and take it step by step, not thinking about the biggest scheme, right? Take day for day. Now, if I know not everybody has got $10,000, right? So let's take something like $1,000. Now, if I told you guys that, yes, you can double your money every month, it is possible maybe for 1, 2, 3 months, but it's not sustainable, yes? So let's say you make 60% per year, right? Now think about it. If you have $1,000 and I asked you to make $50 a month, most of you will say, I can do it, right? That's 5% a month. Over a year, that's 60%. That is at least realistic expectations, right? Not $100, $1 million, right? Now, if I did this with $1,000 and I stayed on track, in 20 years, I would have over $12 million. But who's willing to wait 20 years? If I told you that you can go to college and have $1 million job at the end of it, how long would you study? 10 years? 15 years if you were guaranteed? Yes, maybe, right? So here's the thing. I mean, give yourself enough time. Because if you stick to the method and you don't have that, I want to make this now, I want to make it big now, this can become a reality. Okay. And then lastly, we get to psychology. You know, I have a degree in psychology, not that it helped me much, okay, but in trading, it is something that not too many people think about. And psychology, because we are very driven by our emotions. You know, people, when we invest, when we buy, I mean, I think you all know that you've gone from laughing to crying to hoping to praying to everything in your trading career, right? Now, taking control of your emotions, it is controlling your fear, the fear of loss, the fear of missing out, yeah? Then it's the control of your greed, you know, not having that overconfidence of making it big very fast, not thinking about the Ferrari, the yacht, knowing that trading is a marathon, it's not a sprint, yes? And then lastly, it's basically just the discipline to stick to your method, to your money management. Have that sense of continuous learning and know that the money will come, right? At the end of the day, like I said, we can only control the things that we can control. And I mean, the mind's made up of two parts, and this is where the not using stop losses is coming in, right? Because the mind is made up of the conscious mind, it's the calculator, it's the rational one. It's the one that makes the rational decisions. This is the one we need when we trade. And then we also have the subconscious, the crazy mind. This is the one that tells you in the back of your head, don't put a stop loss, move your stop loss, add to the position. But it doesn't tell you in the last 90 times using the stop loss actually saved you from losing all your money. Okay, unfortunately the subconscious is way stronger than the conscious, and this is why we need to start taking control of it. So trade a little bit smaller, right? Don't think about the big picture. Just give yourself enough time and continuous learning to become successful. It is possible. All right. But anyway, guys, I hope you enjoyed it. Our time is up. I know we don't have a lot of time. I hope you have better insight into what you need to do to become successful. It's been an absolute pleasure. But come and join us in booth 32 for you. We can talk, we can chat, meet the team. And we got bubbles for anybody who wants to join us. We're going to crack open some champers and come and meet the team. And we can talk about trading. All right. Thank you, Kiara. Thank you, guys.
Thank
Enjoy
you.
the rest of the couple of days and good luck. Cheers.